What is going on, everybody? We're back again with another video, and through the poll that I put on Twitter, I see that it is more favorable for trade breakdowns, so I thought that I would do that for the buys that I took on NQ on Monday, and it was a market maker buy model, and we'll be going over internal and external range liquidity as well. This video is sponsored by Crypto Fund Trader, a prop firm where you can trade crypto, forex, indices, commodities, and stocks with demo money and make profit off of it. Crypto Fund Trader has 2 trade challenges, which is a 2-phase or a 1-phase, and you can get up to $200,000 in a trading account. And the unique thing here is the phase 2 is only a 4% profit target, and on phase 2 on multiple other prop firms, it's typically 5%, so that is pretty unique about them. The platform is extremely user-friendly, where you can track and manage all of your trades, and some of the crypto data feed providers are seen here: Coinbase, Bitfinex, Binance, and OKX. Crypto Fund Trader has no trade restrictions, so swing trades are allowed. There's low trading fee commissions and high leverage instruments up to 1 to 100, and raw spreads as well. They also have a 24/7 support team on Discord if you need to answer any questions, or also an open chat where you can chat with somebody live, but a link will be provided in the description of this video. But anyways, let's get back into it. So here we are starting off on NASDAQ on a monthly chart. And as you can see, based off of our previous videos, you know that price moves from internal range liquidity to external range, and from external to internal, and so on and so forth. And I'm recording this on Tuesday the 12th, and yesterday was the 11th. And as you can see, we already reached that external range liquidity target. But I will be going back into Monday's price action as how we started the week and how I anticipated the draw in liquidity for us to reach that resting high. So here is our weekly chart, and I have marked off a weekly external range high and a weekly internal range fair value gap. And this is the start of the weekly candle that tagged the weekly internal range liquidity. And as you can see, when price took out this weekly external range swing high, what did it do after that? It retraced and reached into the internal range fair value gap. And what do we anticipate after we reach internal range liquidity? We expect price to expand back up to external range. So my resting target and immediate draw on liquidity was Friday's high, or previous weekly high. And here's a better depiction with more annotations on the weekly chart. Here is our sell side of the curve and us moving into the buy side of the curve here. And all the up close candles on the sell side of the curve would be considered mitigation blocks, which we anticipate PD arrays to form inside of the buy side of the curve, which we have here, this weekly bullish fair value gap. And after we tag that bullish fair value gap, we anticipate price to reach that external range high, previous weekly high. So what we did there, we identified our weekly key level, and now we're using time frame alignment like I've talked about in my previous video. We go from our weekly key level, which is this weekly internal range, and we now identify 4-hour price structure. So automatically, what can you see here? I see a shift in market structure here, a break of this swing high, and then after we had the break of this swing high, price retraced into discount into a 4-hour bullish fair value gap, and inside of the weekly internal range liquidity pool, we created SMT divergence with ES. So NASDAQ made a higher low and ES made a lower low. So my anticipation would be, if I'm going to long an asset in indices, I'm going to look to long NASDAQ because it is the stronger asset pair. And also, given the fact that Friday's candle retraced already into discount of that 4-hour price swing after breaking structure, I would not anticipate this low to get ran through, especially because we just created a bullish 4-hour fair value gap after the run on discount that closed above the dealing range high that I labeled off. So what I'm going to be referring to look for price to long off of is this 4-hour bullish fair value gap. And as you can see here, price was consolidating inside of the gap. We had an internal run on buy stops, and then price expanded higher to our weekly external range liquidity pool, which is our immediate draw. Now we'll be dropping down from our 4-hour chart to our 15-minute. So here I have price labeled off our run on buy stops and how price reacted off of the 4-hour gap. This is past equities open, and when equities open came, we expanded, but we didn't reach our external range liquidity pool yet. We just actually left it as relative equal highs. So what am I anticipating next? I am waiting for price to reach a 15-minute PD array, and then I'm going to look for a M1 market maker buy model to form off of the reaction off of that M15 POI. So I'm resting a fib from this swing low to this swing high, measuring premium and discount, and I have a 15-minute bullish fair value gap that I'm going to then monitor price on the 1-minute chart to see if I could frame a market maker buy model for us to reach our higher time frame target, our weekly external range liquidity pool. So now that we marked off our M15 bullish fair value gap, this is our key level that we're looking for price to react off of. And here we are. We are identifying the start of our market maker buy model, the run and tag of this M15 fair value gap. This is our smart money reversal, and you can see candles closing above the last down close candle that ran liquidity and then broke structure up. So this is our change in state of delivery, and price retraces into discount of that M1 swing. So this would be considered our low risk buy, our first potential entry to our market maker buy model. And as we continue in price, it respects the M1 gap. So our low risk buy was valid. We push higher. We have candles closing above this swing high now, and we have a M1 breaker that was now confirmed with a fair value gap resting here that you could have also took another entry on if you were pyramiding. And fast forward price a little bit more, we have the bodies of this M1 candle respecting the M1 breaker block. We have just a quick internal run on buy stops, so this is just more accumulation, and price just continues to push in our direction of our draw on liquidity. And moving forward after that, we have our mitigation blocks that we're going to reference again. And for mitigation blocks, what do? You expect PD arrays to form inside of the mitigation block POIs on the buy side of the curve. So here's our sell side. These are our up close candles that you drag out. And what do we have here? We have it. We can't really see it right now, but this is a down close candle, so this would be considered our order block. But there's also a fair value gap resting here, and this is also SMT divergence with ES. So NASDAQ made a higher low and ES made a lower low. So again, we have more strength indications in NASDAQ for us to be pushing, continuing to the resting highs that we have above. And as you can see, another mitigation block resting here, drag it out in time, and what does it do? We form a redelivery, rebalance PD array. So we have more reaccumulation for us to then push and deliver us to finally take out the weekly external range highs that I marked off earlier in the video. And here is the trade breakdown that I posted on Twitter, and this is the execution screenshot on my MetaTrader 5. This is a 1 to 2.25 risk to reward trade, and I hope you guys can see a repeat of the pattern. As to a majority of my trades, they all look the same. I have the same way of looking at price, top down, all the way down to my lower time frame executions, and I do all of this live with my Discord. They see it happen and watch me break down price step by step as to how I'm identifying my draw and liquidity. So if you are interested in joining, I'll have a link to the Discord in the description of this video. But if you guys have any other suggestions as to what I should do next, keep doing trade breakdowns or concept overviews, please let me know. I would be happy to help. But I will catch you guys all in the next video. Stay safe and have a good rest of your week and a great weekend.